Hey Skyview, what's happening? It's Christos and it is May 2nd, 2017. You know the drill here. We are just looking to add another trade to our portfolio. The SPY today is basically unchanged. It's down 0.10% or so. So 1/10 of 1%, pretty small move, very boring day in the market. We're just kind of going nowhere. But anyways, that doesn't really stop us from trying to get trades on. We have exactly 45 days left in that June expiration cycle. So pretty much right at our sweet spot, and we want to get some trades on. If we just go over to our position statement to check out our trade count and the tickers that we already have in here. You guys know I've kind of been defaulting to this ETF watch list, and we got a lot of these on. And then for this stock watch list, a lot of this stuff has earnings, but there's definitely some decent things in there that we could take a look at, like Lulu maybe, Amazon, Qualcomm, Baidu, Verizon, Google if you want, and then a couple of these other stocks down here. But one thing I did notice is that we don't have a position on in gold. We have bonds, TLT, we have oil, XOP, we have the market, SPY. We don't have a gold position. And gold is one of those underlyings that we like to have a position in at all times. So I can actually see GDX. Here is a gold ETF that we could use. And then there's also GLD. Where is GLD? So a little bit further on down in the list. So GDX with a little higher IV than GLD. Maybe we can just take a look at what 6-month and 3-month IVRs look like in there. So let's first go to GDX and let's just get rid of these watch lists so we can see exactly what we have here. So this is the gold miners ETF. And we see this 12-month at 16, 6-month at 17, and 3-month at 40. So 16, 17, and 40. And then let's go ahead and check out GLD. And GLD 11, 11, and 26. So a little bit lower IVR than GDX. I like to trade both of them. I usually trade GLD with condors just because it's $120 stock, so the option pricing has a little more meat on the bones on all the strike prices than an underlying like GDX, which is only around a $21 stock, $22 stock, and I usually do some type of iron butterfly in here. Just kind of looking at what GDX has done this year. It's largely been sideways, right? We go up and we go down, we go up, we go down, and we're kind of just hanging around the middle area here, which is like, maybe around $23 seems to be the middle area here. So anyone selling premium in GDX, keeping a neutral premise like this, has made some good money for this whole year. So why don't we go into the Analyze tab, pull up GDX, and see what we are working with. Now, I usually like to do these things pretty neutral, but just taking a look at what GDX has done in the chart, we kind of see it with the middle of the road, that 23 area. So maybe we can even skew this iron butterfly a little bit to the upside and maybe short these 23 strike call and put, as opposed to doing something neutral down here, $21, $22. Now, remember, does it make a huge difference whether you're shorting the 21s, the 22s, or the 23s? No, it really doesn't. It really is just personal preference, and the first thing my eyes gravitated towards when I looked at this is, we've been kind of above and below this 23 level for the whole year. So, we just like to keep going back to the well, so to speak. And if we go down here, why don't we just try shorten the 23 call and put. Now remember, this is an iron butterfly. What an iron butterfly means is that we are shorting the same strike call as strike put. An iron butterfly is just a straddle with wings, just like an iron condor is just a strangle with wings. So we can see if we just short the 23 put on this, or call on this side, and then the 23 put on this side, and then we go down here, we see we've constructed a straddle, right? But we don't want an undefined risk trade. We want a defined risk trade here, so we will either go 3, 4, or 5 points wide. And I like to collect at least a $2 credit on my iron butterflies because I'm managing them at around 25%. So that allows me to take home at least 50 cents or so when I do manage at 25%. So I have to go out far enough to make sure that, I'm still collecting over a $2 credit. So that kind of gives me around 15 cents of room on each side. And if we go 4 points wide to the 19, that'll be 17, 18 cents. And then 4 points wide from 23 on the call side would bring us to 27. Only around 10 cents there. So let's try this. Let's go 4 points wide, see what that looks like. And then go to the 19. And we're still collecting over $2 if we do this. So we're short the 23 call and put, and then 4 points wide from there on each side brings us to 27 on the call side and 19 on the put side. Now, feel free to change this up. If you want to go 5 points wide, take on a little more risk. If you want to go 3 points wide, take on a little less risk. It's really all just personal preference. As long as you're selling premium, staying largely neutral, managing your winners aggressively, letting your losers play out or be patient with your losers, staying in liquid underlyings. We're all accomplishing the same thing. Doesn't matter if we have slightly different strike selections. It really does not matter. So let's take a look at the risk profile for this. We can see that our max profit would be whatever the credit that we're collecting is. If we are filled at 206, we'd have a $206 max profit, and that would be if we pinned it at the 23 price level. And then our risk to each side is just the spread of the width less the credit received. So it should be a little less than 200, and we see it at 194 and 194 because this is an even spread width. So if we just take a look at the chart, I'll draw some price slices in, short to 23 and 4 points wide from there. So I'll have a little pop-up that tells you where to fast forward to if you want to skip all this part. But we will put our sweet spot in right here at around 23. We'll just edit the properties there. And maybe we'll make this, we'll keep that yellow like that. Okay. And then 4 points wide from 23 brings us up here to 27 on the call side. And this would be anything above 27 would be our max loss on that side. And we'll do that. Maybe we'll give this a nice little red color, huh? Why not? And then down here, 23 to 19, anything below 19 on the put side would be our max loss on that side. So, change the style there, change it to red. And then our break evens would be the credit we received plus on the upside and the credit we received less on the downside. So what I mean by that is we're short the 23 and we collect around a $2.06 credit for that. So that brings our break even to the upside at 23 plus 206. So that would be 25.06, somewhere around that area. And we can edit the properties on there. 25.06 if we are filled at 206. I'm running out of styles over here. There we go. We'll do that one. And then 23 minus 206 brings us to 21, a little bit less than 21, so around 2094. So we'll just do this, edit the properties there, and that brings us to 2094. So hopefully you guys can get a nice little visual of what we're looking at here. 23 is our sweet spot, and then anything between this 2506 and this 2094 area is our break even. So we won't lose a penny as long as it stays in this area, and then our max loss is above 27 on the call side and below 19 on the put side. So that's something I'm interested in. If we get a little bit of a directional move, we should get a little bit of an IV collapse too, and this spread should contract nicely for us. And that's what we want the spread to do. We want it to contract so that way we can buy it back for less than we sold it for. So let's see what we're offered. 207. Let's go in there just so we don't miss it. We'll probably have to play with the spread a little bit, but you can see 205 to 207. It's a very tight spread. So let's just go ahead and go in at the mid price there and hope we get a nice fill quickly. Oh, no Tigado. All right. So we'll go ahead and cancel replace. And we'll go right in between at 206, right in between the NAT and the mid price. See if we can get a fill there. Come on. There it is. So we're filled at 206 on that trade. So just go back to our position statement, show you guys that we have it in there. There it is, GDX and the iron butterfly that we did in there. So just a basic trade in gold. I noticed we didn't have a gold position on. Gold, we just like to trade every cycle. It's one of the most liquid underlyings out there. Plus, it helps keeps us engaged with what's going on in the gold market. And that kind of translates to what is going on in the stock market. So we just did a pretty neutral trade in gold, slightly bullish, I guess, but largely neutral trade in gold. Just looking for it to stay within this range, and there is not much else to it. So that's about it for this video, guys. I hope you learned something from it. Thank you for listening, and until the next video, take care.